There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome back to the Trading Justice podcast, and I believe, Tim, this is episode number 51. Can you believe it?
I can believe it because I see all of the episodes come through my website, our website, Tackle Trading. So I can keep count.
You can? I thought you were going to be like, oh my goodness, that is amazing, 51. You're like, yeah, dude, I got it. I'm good. Let's go.
Well,
Come on.
Here's what you got to understand. Some of the podcasts I listen to are on episode like 551. So I think we got a whole journey in front of us, my friend.
Yeah, we do. There's no doubt about that. We do have a journey in front of us, and hopefully, not even hopefully, there's no hope about it. I look forward to the day, a few years down the road, where we're on episode 500 ourselves. So we'll definitely get there, and people seem to be enjoying the podcast out there. Once again, 5-star rated podcast. People, the comments are amazing. The reviews are amazing. We thoroughly enjoy bringing out the podcast to everybody as well. So it is a pleasure, and you know what? We have a lot of fun doing it as well. So let's get right into it. We got a lot to cover. Obviously market related, economically related, Fed related. But Tim, I want to start out with what's going on in the oil market. Ever since June, we've seen about a 50% reduction in the value of oil. And consumers are out there saying, oh my goodness, that's fantastic. The Fed is saying, oh my goodness, that is fantastic for consumers. They'll spend more on Christmas. What is your take on the oil embargo, so to speak?
I have a lot of thoughts on this, actually, because I teach, I mentor, I trade. I'm connected to markets every single day. And honestly, Matt, I think about it from a social and political and human impact as well. And so there's a lot to think about with the oil markets. Number one, it's not necessarily done going down yet.
Yeah.
I find it very interesting when people get all worked up, lathered up, and they say, oh, it's going to find a bottom. It's got a bottom at 55. It's got a bottom at 60. It's got a bottom at 50. Who knows where the bottom is?
I've heard a bottom in the oil market since about $85. That's where I started hearing a bottom in at $85. It's currently at $55. Do I think there's going to be a bottom eventually? Yes, there is going to be a bottom in oil eventually. That doesn't mean that eventually is going to be when it's going down. Technically we'll be able to see it, and there will be a great opportunity. But in terms of the oil crisis out there, do you feel like the oil crisis we are currently dealing with is good for the economy?
No, I don't necessarily believe it is. I think that it's a reflection of weakening demand around the globe. See, when we think of economy, if you are a U.S. citizen, and a lot of our podcast listeners are, but many are not. In fact, Matt, I really believe we're going to grow a global audience here at the Trading Justice podcast. We already have a lot of students around the globe. We have people in New Zealand, Sydney, Australia, Tokyo, Beijing, Germany, London.
No, I agree. We have lots of students from everywhere, but I want to talk specifically to the U.S. because that's what I'm hearing out of the Fed. That's what I'm hearing about. Just a lot of consumers out there saying, "Oh my God, now I got $50 extra on a monthly basis to go spend money." Do you feel it's good for the U.S. economy for an oil price to literally crash before our very eyes over the last 6 months?
No, I don't. And I'll tell you, one of the major reasons is that is going to hit the balance sheets of some of the big investment banks. Mm-hmm. Part of the volatility we're seeing in the market right now is because investment banks are having to hedge off commodity risk and dollar risk with all of these domino effects that are happening throughout the market. Eventually, that's going to trickle back into just regular prices and affect people's jobs and the whole thing. A lot of the impact that comes from investment banks and Wall Street is not necessarily seen by the common Jane and Joe out there in that. And we are seeing volatility pick up in this market. Speaking of consumers, Matt, I'm going to read some numbers off to you. Last week, there were some consumer sentiment reports that came out of the market. And I'm gonna pull this up on one of my favorite websites.
Are you going to tell me how much opium they've been smoking?
They have 10. There's no doubt about it. But it is a reflection of what we're talking about, the way that people think about the economic impact of oil prices dropping. All right, retail sales, where they came out better than expected. Tuesday, December 11th. Friday, December 12th. The University of Michigan puts out a consumer sentiment report. It put in a reading at 93.8, which was 5 points higher than expected. People out there are feeling pretty confident right now.
Mm-hmm.
You know, with the price of gas at the pump lower, and food prices have become more reasonable as well, the natural effect of having the dollar strengthen, it's driving commodities, and I think the average person really likes that.
Yeah.
It doesn't necessarily mean it's a good thing long term for anybody.
That's a good point, Tim. That's a very good point. We were talking on the Tackle Trading Coaches Show earlier today with Gino and myself about, and Gino made a very good point. He said basically, you know, there's all these sectors out there, and they're all in the red for the month of December so far, and there's all these different industries, and Gino tracks like 32 different industries out there, right? And he said the only industry of those 32 that he likes to track that is actually showing some degree of upward movement that is in the green so far in December is retail sectors and retail stores, and that's a direct correlation between kind of how consumers out there see, you know, the economic value of oil and their own wallets, and consumers they can never see outside their own wallets, and so it gives them a little bit more money to spend. They spend that little bit more money in terms of getting out there in the market, and all of a sudden retail goes up, you know, commodities go down, dollar strengthens, and I just don't see this as a good thing for the economy. I mean, you look at a dollar that is getting very strong, all that means is that all of our goods become more expensive for the world to purchase. You see oil going down and down and down. You got to realize oil, one of the reasons the economy was getting better was because jobs getting pushed out there in the energy sector. And these companies making a lot of money in the energy sector and oil itself, and now they're starting to get a little nervous out there. They're going to start cutting back, and you know, the way I see it, Tim, and I could be wrong on this, you know, lower oil prices is fine when it's, you know, $80, $90, $100 a barrel, but at $50 a barrel, that means these companies in the U.S., these oil companies, are no longer showing a profit. And so they're going to have to start pulling back. And so the consumers can be happy all they want until they get fired and they don't have a job.
Let me ask you a question, and try to make it as simple as you can. Why is oil dropping? Why is oil going down? Why is oil hitting the mid-50s right now? What is the underlying?
To me, it's as simple as Saudi Arabia. You know, it's as simple as Saudi Arabia wants cheaper oil prices. And the reasons being, quite frankly, I think they're trying to put a lot of pressure on countries like Iran. I think they're trying to put a lot of pressures on countries like Russia because they need oil at $90, $100 a barrel to show a profit. They're not there yet. And the Sauds, they don't really like Russia or Iran. Russia and Iran are supplying military militia groups in Syria to fight the groups that, you know, Saudi Arabia is supplying in Syria. So I think you're seeing a little bit of an agreement between the America, to a certain extent, the Eurozone, as well as Saudi Arabia, saying, hey, listen, let's put a lot of pressure on Russia. They're already putting economic sanctions on them. President Obama signed some more additional economic sanctions, and now this little agreement between, you know, a wink, wink, nod, nod between the Sauds and America and the Eurozone, you know, putting pressure on Russia. So I think a lot of it has to do with simply putting pressure on Russia because of what they've been doing over the past year.
You know, I've been trying to wrap my head around it as well. I have some theories, some ideas. As a trader, we don't really know what the U.S. government is actually doing. We don't know what the things are happening behind the scenes, but we can speculate. You know, and I think we have to make sure we explain that to people. Some of this is just speculation from a seasoned experience. It comes from a position of knowledge, but at the end of the day, Matt, we don't know what goes on in these smoke-filled rooms, right?
We're not sitting at the round table. We're not a knight. We're not, we're not sitting there saying, "Hey, listen, this is what we know is happening." This is what I'm speculating is happening. I think there is some agreements going on, putting a lot of pressure on Russia, and what we've been seeing not only in the Russian economy, but the Russian ruble. I mean, the ruble is just getting absolutely slaughtered today. Not today, but yesterday. The ruble, that's the Russian currency. It's down just historically, just yesterday alone, Tim. It was devalued 25% yesterday. I mean, I trade currencies a ton, and I was looking at the ruble pair, and I wanted to make a trade on it. I saw it. It was huge momentum. I wanted to make a trade on it, but guess how large the bid-ask spread was in a currency? $5
On the pips?
on the pips. $5.
Are you serious?
I am dead serious. It was like even earlier today. It was like the bid was like 60 and the ask was like 65, like dollars. And I'm sitting there going, oh my God, if I get into this trade, I'm down big time.
Okay, to put some context into that, guys, if you've never traded a currency, if you traded like the yen and the dollar or the euro and the dollar paired against each other, the spread between bid and ask would literally come back to like 1,000th of a dollar. So the fourth digit, right? So instead of a penny, move two numbers to the right, 1,000th. And so that's incredible, Matt. I didn't see those this morning.
Honestly, I'm looking at the yen dollar right now, the dollar yen, and the spread is 2 pips right now. It will range between 1 to 3, maybe 4 pips, just depending on how much volatility is coming in. But it had a $5 spread, and I was just like, I can't do this. I wanted to do it. I wanted to do it bad because it's such a momentum. But I'm like, I can't do that. That goes against every principle that we have as a trader. You're just down so much money just even getting into the trade. And so, I was looking at that, and a lot of that has to do with what's going on in the economy in Russia. And, I'll tell you right now, I feel bad for the Russian people. I do. Their currency is literally devaluing to historical levels. It reminds me of what happened in 1998. It reminds me of what happened in 91 with what happened with the devaluations in their currencies at that point. And I honestly, Tim, I think it's just starting. The Russians just yesterday increased interest rates to 17%. 17%. And I had a.
You're a political thinker. While you finish this thought, because I want to grab part of that conversation. Is possibly this the new normal in terms of international relations?
It's a good question.
I mean, the U.S. is not going to start a war with Russia, so maybe they just screw with the currency system.
Well, it's the new. I think it's a new Cold War. I don't want to say that lightly. And so I'm not there yet. I mean, but you think back to the Cold War between us and Russia back in, from 1950 until 1991. It was a mutually assured destruction based on nuclear weapons. America and the U.S. had so many nuclear weapons that if one person acted dumb, it would assure the destruction of everybody. So nobody launched nuclear weapons. What we did was we basically fought wars. We supplied other groups to fight each other, like what happened in Afghanistan with Russia in the 80s and what happened with us in Vietnam in the 1960s, early 1970s, and everything out through all of the Middle Eastern countries throughout the last 40 years. So we would just supply each other's armies that we would then fight them separately. So today we're not doing that to a certain extent, but we're now starting to just do these economic sanctions and currency wars. And currency wars, Tim, have a tendency to lead to real wars. Historically they have, and I'm not saying that's going to happen in this capacity, but at the same time, you look at the last 14 years of currency history, and the new traders. And I'm in that capacity. I am a new trader in that capacity because I came into this in 2005 and really only started trading currencies in 2011. But I do have a perspective of history. I love history. I love studying history. I love learning from the past and whatnot. And you look at all those new traders that came from 2000 to now. They don't have that sense of what happened in '98 with the oil crisis in '98. They don't have that sense of history what happened in the '90s with the massive devaluations and inflations in the emerging markets. What all these new economists and what all these new traders, their sense of the emerging markets is from 2001 on with the BRICS. Brazil, Russia, India, China, and South Africa in 2010. And so now they're coming into this and they don't have that historical perspective. They don't understand what truly can happen when oil does crush. And so they're looking at, and you're hearing all these people saying, oh, this is a buy, this is a buy. The BRICS are always going to be good. The BRICS are always going to be good. They're the emerging markets. And that's not what I'm seeing in the marketplace. I'm seeing something that is more reminiscent of what happened in the 90s with the emerging markets and what happened in the 2000s when you saw Brazil hyperinflate, going to their currency basically die. You saw Russia go into massive devaluations and depressions. You saw these in China the same way in the 1990s. So I'm seeing a lot more consistency in terms of economic models from the 90s than I am the 2000s. And the emerging markets are getting absolutely slaughtered right now, not only from a currency perspective, but from an economic value perspective. And I honestly, Tim, I think this is just starting.
Yeah, and it's a good reminder to everybody who listens out there that maybe you don't know everything about the global economic system yet, but if it's just starting, and that's right from Matt's mouth right there, you probably need to learn about it.
Yeah.
Because we do live in a global economy, Russian lending rates from their central bank affect their currency. That affects the oil markets. That affects the European bourses. That affects the U.S. markets, and it trickles through the day. It's a 24-hour cycle we live in, and it's all a big domino effect. You can almost kind of see it waving. Like in the old stadiums, Matt, when they used to do the wave. It waves around the globe, doesn't it?
Yeah. And you look at Russia increasing their interest rates to 17%. That is like a stock saying, hey, I will pay you a dividend of 17% if you buy my stock. And that's just a telltale sign. No, you want it. That's a telltale sign that the company is really, really struggling. They're begging you for money. What the Russians are saying is, if you buy our money, guys, and help us stabilize the Russian ruble, we'll pay you 17% on that. And I got a interesting tweet to me today from one of my students, and Salon said, you know what, Matt, would this be a good carry trade? And I said, oh yeah, you could carry the positive interest on the difference between the 17% Russian ruble and the 2% swap rate on the US dollar, and you can carry a huge percentage, but you're going to lose all your money on the direction. And so it's a very, very difficult time out there in the emerging markets. And it's one of the reasons why the US dollar is such a safe haven right now, is because, it's the emerging markets are so bad. And like I said, I'll come back to this. A lot of times when people first come into this, they think, oh, I missed the first movement, so it's over. And no, that's not the case. We are now just starting to see this trickle in. And honestly, guys, we're just starting to see it trickle into the U.S. marketplace. I mean, that's what are we down? 5% last week? That's nothing. We're just starting to see these prices happen. Yeah, it happened in the oil market first, but that doesn't mean it's over. That doesn't mean we're not going to have a lot of opportunity as an investor, as a trader, in multiple capacities over the foreseeable future.
I wonder if the new market is going to be more like 2014 than it was 2006. Obviously it will, even in an upward market. 2014 is probably going to end the year a little bit up.
Yeah.
But it's marked with huge periods of volatility. You look at the month of October, you look at what's happening right now. When markets sell, they get nasty really quick. What advice would you give people out there, Matt, on how to handle that volatility?
Well, number one, you always have to have a game plan. You got to have a game plan. You got to execute that game plan. You cannot make, you cannot make a determination every single day about your overall portfolio. You have to create a game plan, execute the game plan. And in my estimation, long-term trades right now are not good. Swing trades, day trades, those are pretty good right now. You also have to have the ability to switch your style, switch your tradable instrument. Predominantly for the most part of 2014, I was trading a lot of options, but in the last quarter, I've kind of switched to more currencies because the currency market has been a little more consistent in my estimation than the equities markets have. So, I don't think there's one answer out there, but I do agree with you. I think in 2014 coming into 2015, and I'm sure we'll do our 2014 recap podcast and 2015 look ahead podcast coming up over the next couple of weeks. But you look at 2014 in comparison to like 2006 or 2013. I don't know if we're going to see another market environment that is just straight directional. We're having a lot of volatility come in. We're having a lot of movement come in, and there's just so much uncertainty out there right now. From the Middle East, from oil, from slowing growth in China to all of the economic sanctions and recessions happening out there. It's going to be a difficult market in my estimation, but that doesn't mean you can't trade. That doesn't mean you can't make a tremendous amount of money. You have to be consistent in your approach. You have to be disciplined in your approach.
You're listening to the Trading Justice podcast here, presented to you by Tackle Trading, where we've got the two hosts, Matt Justice, who is here and fighting through a cold and a cough. Matt, you've been under the weather lately.
It's been a couple weeks now, and I feel fine. It's just the remnants of everything, just the remnants. So we do have a guest here today, and Tim, I know you're going to interview Gino, so I'm going to step aside and let you guys finish out. So Gino Poore, why don't you come on in here?
We're going to let Matt get some rest, Gino, and you and I are going to chat. We're going to record this thing and get some information out there to the people. It's good to have you. I do want to introduce Gino, Matt, give him a formal, official introduction.
Absolutely.
Gino's our friend. Gino is our colleague. We've known Gino, and since 2005, when we started with the Rich Dad Education Group and became mentors with them. And Gino has a tremendous history in markets. And one thing we wanted to do tonight was really dive into some of that experience and that history. And one thing we're really excited about is Gino's one of the coaches from TackleTrading.com. And so we have a chance to kind of pick his brain, talk about how he comes up with his plan, his strategies, his history. Gino, how you doing, my friend?
I'm doing quite well, Tim. Just listening to you guys talk. It's quite interesting and very, very awesome information you're putting out there. Appreciate it.
Yeah. So first thing I want to talk to you about is a little bit of a reaction to what we were just discussing, these oil markets and the global economy. I'm sure for the average trader out there, Gino, it's a little intimidating. Why don't you just talk about that for a few minutes? Your viewpoint of where the economy is and what we need to focus on.
Yeah, Tim. I talk to a lot of amateur and very professional traders, and I have to keep my mind straight because sometimes I'm trying to remember who I'm talking to. Like it's a very broad spectrum from a beginner to an advanced trader. I mean, as well as I do. You and I and Matt, we've all gone through the stages and development and maturing as a trader. It's quite a journey. I mean, it really is, because I talk to beginner traders and they're thinking, is this a buying opportunity, or do I sell? There's something going on. How do I take advantage of it? The feds are speaking tomorrow. How do I make money from it? And they're not sure which direction to go. They're almost too close to the trees to see the forest. And when you're talking to beginner traders, they still have that investor mindset, and it's really hard to do what we're doing today, and that's look at the global picture. You guys are looking at the global picture, and it's tough because when you're first starting out, you're just trying to remember stock symbols. You're trying to remember like Apple's AAPL instead of APPL, and you can only remember like maybe a dozen at first, and then what a swing low is and what a swing high, and heck, what's a bid ask? Which one do I sell at? And now you're listening to this podcast, we're talking about globalization and emerging markets, and oh my God, that stuff is so advanced. And sad thing, Tim, is what Matt was saying. If you don't learn it and start sometime learning the global markets, And most people, I swear, most people, you ask them what the ruble is or the euro, they don't know. They don't know what it is, let alone economics. Now, did you go to economics in college, Tim?
Oh man, I could barely even get out of bed, and get to class, let alone study economics. I Yeah, I think that I had Econ 101, and I'm trying to remember the title of the class. The teacher was a dick. I hated him. I don't even say that the way I really feel. If I really described how I felt about it, so that might have been part of it. And actually, that's a good thought right there, because if you get a bad teacher on a subject, it's likely that you might not want to continue it, even though it could be a very passionate thing, something you would have enjoyed. But if you get a bad exposure when you're new to something, that can really turn somebody away. And I hated my instructor. He was just a pompous guy. He didn't make it fun. It was all just very technical. He would talk down to his students. And so I didn't do well in economics in college. Anything I know about it, it's just from being a trader. Honestly, that's just all it is.
Well, it's funny. I took quite a few classes in college. I didn't finish my degree because I had a better opportunity than college. But what's funny is I don't remember if I took economics or not. I know I'm getting kind of old, but still, I remember math. I remember English. I remember the good-looking girl sitting next to me in the fourth row and all that stuff. But I can't remember if I took economics or not. Isn't that crazy? So that's how boring that class was.
Yeah, I remember my racquetball class.
I think mine was basket weaving. I definitely remember that one. But, the thing is, I didn't have any money on the line. I didn't have any money on the line. I didn't have my nest egg on the line, so it just wasn't important to me. I was always good at numbers. But I never thought about thinking global, because a lot of times, Tim, most Americans, and I'm aiming this at Americans, we're so, especially in California, we're so busy and focused on our little community and our little neighborhood that we don't think outside the box. We don't think outside the county. Most people don't even plan about what they're going to do with their finances next month. They're just trying to make it month to month.
Mm-hmm.
And then they save up a nest egg or a good couple $1,000, and they think, well, it's not enough to buy a real estate, or they don't have good enough credit. So a lot of them go, I know, I'm going to go in the stock market. And the sad thing is there's no clue about what level they want to get to and how much stuff is out there. I mean, think about the books you and I have read. I could probably stack them up to about a 4-story building if you stacked them up one by one. Yeah, all the magazines and articles. Heck, just the magazine articles you and I and Matt have wrote together can stack up to. But I mean, it's just I don't know if I would have pursued it, trading, if I knew I had to go through all that learning. That's just the reading part. That's just the academics. But the actual physical doing it, placing the trades. If somebody told me, hey, you wouldn't be a good trader until after your 2,000 or 3,000 trades, I would have been like, nah, I'd rather go play a video game. But there's one thing that helped me drive through all that diligence. There's one major thing, and I want to make that the theme of the day, that kept me doing it. And there's one thing that makes me want to do it when I wake up tomorrow. And there's one thing that makes me talk to you right now on the podcast about it right now. And it's because, honestly, Tim, on the top 5 things in my life, trading is by far my favorite thing to do. I love doing it. So I like to trade. I like it. And if you don't like something, it's hard to succeed or success in it.
Right.
You and I start talking trading. How many times have we talked trading while we're in Vegas, while we're in Utah, while we're in Florida, while we're on the phone? I mean, we just talk about the markets nonstop, more than we talk about sports, more than we even talk about our own children, right?
It's crazy, but that's a big part of why we started Tackle Trading, quite frankly, is that once you gain a certain amount of experience and knowledge, you just love talking about it. You love sharing that knowledge. You love, shouting it from the rooftops, as they say. And the other thing that you start to recognize is that it doesn't hurt you at all to spend some time and educate other people who are in a situation that you were in at one point. I had a trader one time, Gino, and I asked him to teach his system to a group of traders. And he said, there's no way I would teach my system. I don't want to let that information out into the public. And I'm just thinking, are you crazy? And I explained to him, I was like, listen, everybody in that room could become a millionaire using your system, and it will not negatively impact your ability to use it. The market is that big, you know. And I think it's a reality check that you come back to when you're a trader, is that markets are fairly efficient, and you can take part in them. And it's not like there's proprietary knowledge. You know, a pullback's a pullback. It's just about learning how to build a system, develop the right mindset, understand money management, discipline, routine. And that's one of the reasons I love bringing beginners in and really helping them grow from the ground up. I do want to go back to something you were just talking about there, which is your journey getting started. When did you start trading?
Well, Tim, not early enough, not soon enough is what I tell people now that I look back. And once again, if I knew I had to go through all the education to get where I am today, looking back, I probably wouldn't have done it. If somebody would have actually stacked up the books and gave me a little crystal ball and said, you have to do this many option trades, this many stock trades, and all this other stuff, I would have said, no. But you see, it was 1998. And just like anything, it started out with a curiosity. Everything you do in life starts out with a curiosity. And my dad and I were always, doing stuff on the side, like hobbies and stuff, from fishing to boating. You know how your parents try to find a hobby to do with the kids. And my dad, I was out of the house and out of the military and running my own business. And he said, "Hey, do you want to go do some laser tag? It's a new thing and thing. Do you want to go do this?" And one day he said, "Do you want to go to my investment club?" And I go, "Oh boy, not really, but why not? I'll do it for you." So I went to see this investment club, and they all met around this round table. They voted for what stocks they're going to pick and all this stuff. And this is 1998. They talked about some company I never heard of called Amgen and Intel. And I was like, Intel? And I thought Bill Gates owned Intel. I thought Microsoft and Intel were the same company. I was just so lost. Technology. And I was listening to them. They all threw in $50 and they bought stocks. And I was like, wow, it's like a little business he's got going. But they were so serious. And then I went over to his house and he was in front of the computer. And, he had a nice computer back then. It had like 500 megabits. And I go, "What are you doing?" He goes, "Well, I'm looking at IBM. Every time it drops to 100, I buy it and it goes back up to 115. And I go, "What does that mean?" He goes, "Well, you buy a share, like $100 share, and it's $100, and then it goes to 115 and you make $15. And I go, "For one share?" And I go, "Wow, what if you bought like 10? He goes, "Well, you make 150. And I was just like, wow. So that's why people save their money. They buy these stocks. And he goes, "Yeah, you can buy Coca-Cola for 30 right now." And I'm going, "Yeah, but, my money." So not shortly after that, he gave me a birthday card. I met for lunch and for birthday, and he gave me a card. I opened it up, and right there, it says, "Happy birthday. You now own 5 shares of Amgen and like 12 shares of Intel." And he bought the shares for me. And I was like, great. Wow. Because he knew I didn't have an account, so he started an account for me, and he goes, "You just tell me when you want to sell them." And I was like, wow, he really wants me to do this. Now it was on my birthday, and that was in 98, and I was like, oh, great. Now I got to watch these shares. So I turned on the TV station, found where the stock was going, and it was going up a 16th and 8th, whatever. And the dot-com hit, my Intel went through the roof, and I said, yeah, do I make any money on that? He goes, yeah, after commissions you make a little bit. And so he sold it, and I got these shares in the mail and all this stuff, and this little confirmation. And then next thing I know, I logged on the computer. It was dial-up 14.4, and started my own account and started going, you know what, I'm going to start putting some money in here. And I said, in the next 10, 15 years, because I had my own business going, I had a legal service I was running errands for lawyers pretty much. And I said, I'm just going to start buying shares. It was a curiosity that kind of turned into a game. Wow.com. The curiosity turned into a game. I'm going to buy some stocks. Some are going to go up. Some are going to go down. If they go down, I'll just hold them. Then what happened after it became a game, Tim? I started learning the investment rules and a little bit of charting. I found some books, and I found some little indicators. Then I realized I wasn't sure when to sell. And that game I was playing turned into a hobby. I had my favorite stocks that were making me money, and some other ones I was just kind of gambling on. And then all of a sudden, I had a weekend free. My uncle and my dad got together. We talked options and didn't know what it was. And we realized, yeah, I need to take some education. So I took a course that was once a week that led to another course that led to another course that led to Rich Dad and a whole bunch of different day trading courses. And next thing I know, I was the go-to guy to send out and learn the stuff. So they'd send me out. My investment club would send me out, and I would gather all the information and bring it back to my investment club and teach them. And the options was tough, man, because there was no technology back then. I mean, back in 1999, it was graph paper. Square graph paper and a pencil. That's how you graphed your charts. And it was actually faster to call up and get a quote than it was to load up a chart on your computer, because it was dial-up and people would call and kick you off. And oh my God, you had to really like trading back then. But again, it was a hobby or a game because you're kind of learning. And the .com is what got me sunk. Tim, I had Qualcomm. Do you know what it did in 1 week? Do you know what Qualcomm did in 1 week back in the .com days?
I mean, I could look at a chart, but I wasn't trading then. I was
In 1 week,
chasing.
it went up 400 points. So anybody who had Qualcomm got bit by the bug, because I don't care if you had one share, but one share would made you $400 that week. I was like, I had a few shares, and I go, wow, if I would have really planned this, like there was people talking about how many millions they made on it. There's a guy in my investment club who had 1,000 shares at 29, and he was in his 20s. And he goes, I'm going to buy my girlfriend a $30,000 diamond ring. I just made a whole bunch of money on Qualcomm. When that happens, Tim, you don't want to go back to a 9-to-5. And I was running a business that was doing good, but I was like, wow, every day I'm hearing of these stocks. eBay going up 100 points. AOL up another 100. Amazon down 50 points. Everybody's loading up, and now it's up 200 at the end of the week. You're just like, this is the stock. And then all of a sudden everything got too expensive, so I said, I better learn these options. And options were about 1/10 of the price, sometimes 1/5 of the price. You'd buy them only a few weeks out. If you didn't double your money every month, something was wrong. So there was so much craziness going on, Tim, that was addicting. And I got bit by the .com bug. And
So early on, you got pulled in with the action, the gamesmanship of it. Sounds like you love numbers, you love the idea of companies. But one thing you just said there that I found very interesting is you were in this investment club, and after you would take a class, you would go back and share that knowledge with your club. So you've always been a natural teacher. Is that something that you grew up with? Is that something that you like sharing knowledge, or where does that come from?
I was always impressed by magicians, believe it or not. You know, how do they do that? How does that happen? So when I see something that nobody knows about, or I find something that I can show somebody that's new and get a reaction out of them, it's kind of like a magician. That's what a teacher is. They like the thrill of you responding to the learning. They throw some education at you. Teachers hate it when students just are not interested. They don't do their homework. But these guys were paying for the course. I was learning. The learning was making me money. And all of a sudden, looking at charts in the morning, I'd get up at 6 in the morning before I'd take off and do my daily routine. I'd go, oh my God, load, the chart's loading. And the day, Tim, I upgraded from 14.4 internet to 28.8. Oh, that was so awesome. I couldn't wait for them to kick on that connection when my phone company said, okay, you're good to go, or whatever it was, cable company. The charts loaded a little bit faster, and there were still delayed quotes of like 15 minutes. But I was like, wow, this is fun. But you know what's funny, Tim, is I'm a slow learner. So when the charts were loading slowly, it was perfect speed for me. Nowadays, I don't think I'd be able to learn with the charts loading this fast. But they're just coming by too fast. I mean, the charts were loading so slow, I'd be able to read it. I would read it and see the patterns, and you can kind of go, is it up? Is it down? It is up. Okay. You would remember everything was moving slower, so it absorbed easier. So I would actually take notes of how do I teach this to a person that's slow like me? Take it back to the investment club. But I'll tell you, options was a hard animal to teach back then, and it still is if you're not careful.
So what got you into options? Like, who introduced it to you? Where did the concept first come into your consciousness?
Well, people were saying I bought an option, I bought a call, I bought a put. But it wasn't about puts, it was all about calls. I bought a call on this .com, and I made $2,500 between Friday and Monday. I asked the guy, what's a call? Well, it's cheaper than a stock. That's all he told me. What's a put? Well, that makes you money if the market goes down. And I'm like, the market? What about a stock? How do you know if a stock has an option? I had so many questions. My uncle was trying to explain it to me because he was just getting involved. And that's when I said, I got to go to an option school. I found one by a guy named John Najarian and Rance Mashek who were teaching straight from the floor strategies called Pit Trader and Spread Trader's Edge. And it was back in the late 90s. And they were in town. And now remember, I read Wade Cookbooks, Darlene Nelson, which is now Better Trades and all that stuff. I did some stock trading with Maverick Traders and all this other stuff. And I got options. These guys knew how to teach spreads right from the floor of the exchange. Dr. J held the record for the most option trades in one day. I think it was over 3 million. So I said, I want to learn from these guys. So my investment club sponsored me to go and learn and take the course. And I took very tedious notes, brought it back, and taught strategy for strategy. There was 25 strategies. And then all of a sudden, Tim, I realized that I had a little system. The market tanked and took me out almost completely at the dot-com. And what's funny is I was only studying the upside of the market. I was only studying the upside, and so were the classes. So I had to start studying how to play the downside. And I said, boy, when the upside comes around again, I'll be ready. So I had to learn puts. I had to learn put spreads. I had to learn ways to use very little bit of money in the market for a chance of making a lot of money. And that's the key, is how do I use a very little bit of money to make a lot? You know, and that's with spreads and strategies. And that's when I started realizing that if I want to keep this from a game and gambling, so it goes from a curiosity to a gamble to a game. And as your education grows, it's a hobby. So on my days off, Tim, or I would put together my little plan. What strategy would I use? And it was
And I want to ask you a question about that gambling word that you used a few times. How hard is it for a new trader like yourself back in 1999, 2001, 2002, when you start seeing the numbers fly, you start seeing the dollars come in, you hit the $2,500 over the weekend? How hard is it to avoid that gambler's mindset?
Oh my God! That's the thing, is when you're brand new, you almost everything feels like a gamble, but you're trying to put reason and odds into it. And that's one of the secrets of trading, is everything in life's a gamble. Getting on the freeway in your car is a gamble, especially in California when it's raining right now. Getting an airplane with this Ebola virus, that's a gamble. Everything's a gamble, Tim. I mean, that's why I'm thankful every day I'm alive, is everything's a gamble. So what you're doing is you're always, in every facet of life, is trying to put the odds in your favor to live longer and better. Well, then again, I stopped at Jack in the Box today. That didn't help. The greasy tacos don't help that at all. But in the trading market, you're looking at opportunities and you're too focused on reward. You're focused on reward. That's why you're here. So the reward draws you near the fire, but you got to use risk management to keep you from burning yourself. And that's what I never understood. I heard that over and over and over. I've been trading almost 17 years, and it finally makes sense, I'd say, probably after first 6 of what they meant by risk management. Risk management doesn't mean jump in there and try to grab an opportunity every time you can. Risk management means how do you take advantage of that opportunity with the least possible amount of money that you have. And, I don't like having a bunch of money in the market. I like cashing my money out of the market and putting it to safety. And it was hard for me to understand that, because I always thought the bigger the count, the more I'd put in the market. But yeah, Tim, it went from a gamble to a game. See, everything's a gamble when you're uneducated. And that's why I have no clue why people try to self-educate themselves in this field. I know so many people out there trying to figure it out. When was the last time, Tim, somebody, and you probably hide like I do, like a celebrity, when somebody finds out you're a trader for a living and you're a professional trader, first thing they ask you is, hey, you got a good stock pick? And you're just like, oh man, it's not that I don't want to tell them what I'm trading. It's just they don't know how to handle it, And I get that all the time. Has that happened to you when you've been at a dinner party or something and somebody says, what stock? Has that ever happened to you?
Well, it happened a lot more a while back. I mean, I used to talk more about that kind of thing. What I've found with my own personal, relationship with people in society is I don't bring it up much unless somebody asks.
That's
And
right.
one of the reasons is
Exactly.
not many people are very receptive to getting advice. Nobody wants unwarranted advice. And I don't want to sit around and tell people that they got to change the way they invest if they're not ready to hear that. One of the things I love about tackle trading is these people are coming to find us. They're searching for this knowledge, and so sharing that, I mean, it's the easiest thing in the world. Somebody who wants to learn, who's willing to be coachable and come in and really grasp the rules and the structure and the system, I get excited to teach that person, but just some random person, not necessarily. I want to ask you about a couple of things here, and you're pulling me in on this conversation. I really like it. Your beginning part of the journey is fascinating. What happened during the dot-com crash? Because you were a new trader, and I'm sure that volatility was really, really tough. I was not trading during the dot-com crash. What was it like then? How was the market on a day-to-day basis?
Well, just to explain what the dot-com era was, it's when all the internet stocks or anything related to the internet, AOL, man, that was a big name back then. America Online. I think I know two people that have American Online still today as their email, but it's still out there. It's still a company. I think Time Warner owns them or something. But that was like a big name because everybody's like internet. Qualcomm, Cisco, Intel, anything that drove the internet, any computer company. There was a computer company called Gateway, Compaq, all these companies. There was a company called GoToNet. And then there was this other one called Lucent. All of them had something to do with the internet. JDS Uniphase, Oracle. They were the top 5 stocks. It was like Oracle, Lucent, Intel, Microsoft, and Cisco. Everybody, and Qualcomm. You had to have those. Then there was the crazy ones like eBay and Amazon, brand new companies. Who's going to buy books online? That's what the word was. Why would you buy? No, nobody's going to give their credit card information online. Now, that sounds like a long time ago that people would be afraid to do that, but do you realize it was only about 16 years ago people are afraid to put their credit card on the internet? And now it's like, why would you drive to the store? That doesn't make sense. You can just buy stuff on the internet. Well, looking ahead, these companies were getting so many subscribers that they said at this growth rate, these are $1 million companies are going to be $1 billion. They're going to be $1 trillion in the next few years. So all the stock market was jumping on these. It wasn't uncommon to see eBay or Amazon move 100 points a day. So yes, think about this. The market makers had to price in $100 on those options. Even if the stock was $300, the out of the money call could be $100. So it was like, wow, I almost want to buy the stock on margin because the options are so darn expensive. But I was forced to 2 options, Tim, because stocks were getting too expensive. So what happened was the stock would run up to $300, $400, $500, and what they would do is they would split. They would split the shares, a 1x2 or 3x1 or a 5x1, and bring them back down. I mean, I think it was a matter of 2 or 3 years. Dell Computer split like 8 times. And if you double that down, if you figure that out, that's 100 shares goes to 200, 400, 800, 1600, 3200, 6400. Now you have 12,800. Now you have 25,000 shares off of 100. Think about that, just in a few years. So stock was going up and splitting like crazy and paying dividends. It was so many millionaires being made. Me and my friends would get up, buy a stock right in the ball, anything with .com in it. It was so, there's a word for it. They call it irrational exuberance. Meaning it didn't really make sense because when you looked at the fundamentals of the company, Tim, most of them weren't making a dime. They said they had too many expenses. A lot of the companies were being run by kids in their 20s just out of college because they knew about computers and knew how to set it up. Some of these companies didn't even have structure in place because they were called boiler rooms. They were just penny stocks planning to start a .com. And Warren Buffett came out and said something that I'll never forget. I will not invest in these high-tech companies because they have no earnings. And you know what they said to him? He's an old man. He doesn't know what he's talking about. They said that about all these older guys that trade from Wall Street. They don't know what they're talking about. This is a new age. .com. You can trade online. These guys are dividend investors. They kicked these guys to the curb. And then all of a sudden, the market dropped 10% in a matter of a week. And
I wonder a couple of things about that. That's a very interesting point. And that makes me think about the bond bubble in 2007.
Yes.
I wonder if a lot of these bubble markets are created by the younger generation that's just getting into Wall Street, that doesn't really know about the risks of creating all these fancy products that haven't been tested, or companies that don't have earnings. You get a guy like Buffett stepping back and saying, whoa, I know all these tech companies are high flyers, but I'm going to stay away from them. And then they eventually crash. I know a lot of bankers who talked about the real estate market in 2005 and 6 and said, this thing is going to blow. And that's exactly what it did. But during a bubble market, Gino, these young guys, they have a hard time being conservative, because they're going after the profits, right?
Oh, totally blinded. That's your beginners, totally blinded by the reward. And I was too. I was like, this old man Buffett guy, I just made 100 points on Qualcomm in a few hours. Why? Well, he's missing it. He's missing the party. Why wouldn't he just go in there and play this thing? You know what's funny, Tim? I picked up so many bad habits. I remember buying a call option. It was way out of the money, meaning it was cheap. It was eBay. This happened on Amazon too, because earnings was coming out, and the whole idea, Tim, is it's so wrong. Is you buy a call right before earnings, because these companies, after they would report their profit and what it was is their growth, their subscriber growth, and their outlook, they'd be like, yeah, we lost another $1 billion, but our outlook is huge. They would gap up like $100, or they'd run up, and then they'd say, and we're splitting our stock. And it would just go crazy. It was just this like feeding frenzy. Well, one time, Tim, towards the top of the market, eBay said, yeah, this isn't looking good. We don't have a lot of money in the bank. It dropped $100. It went from like $230 down to like $115 or something. So my out of the money option was like, I think I spent $4,200 for it. I'm just guessing. Don't quote me on that, but I remember it was a lot. So it was like $4 and whatever it was $42 or whatever. And yeah, out of the money, $42 for the option. It dropped. The stock dropped. I opened up my account. My option was only worth like $500. It was down like 90%. So when the stock drops that much, gaps that far, usually this is what you're supposed to do. Get the heck out and take whatever money you have left in your option and call it a day, right? You got lucky there's any money left in that option. But you know what we were taught to do, what the whole environment had us doing? Oh, that's okay. We still have 2 or 3 weeks left in the option. It could still run up. It's only $200 out of the money. Because if it's going 100 a day, heck, you got 2 weeks. And sure enough, you know what it did? It ran up, and my option was actually in the money by the time expiration came. And I made my money back and then some. And you know what I said to myself?
Wow.
Good thing I didn't sell. Good thing I held on to that call. And it didn't bother me. It didn't bother me at all that it gapped down 100. Because it's a .com. It's going to come back. So when the market pulled back 10 or 15% on the first drop, that was the first scare, Kramer and all of us guys out there said, oh, load up. It's going to come back. That you want it to drop. The bigger the drop, the better, because now you get a cheaper price. Then AOL hits.
That right there is one of the problems with bad habits, is that when you do something that anybody with experience would say is the wrong decision, but you're rewarded from it because you got lucky, you end up making that bad mistake again down the road, don't you? And usually it's tenfold.
It's called baggage. Yeah, you take it with you. And you know what, Tim? There was almost 70 people in my investment club. We were taking all these courses. The crash was so bad, and we were so glued and stubborn about being bullish, it wiped out all but about 4 of us. Only 4 of us had money, and a lot of people still had money, but it was so like a wake-up call and so like cold water in your face that you're like, okay, where'd my money just go? And why am I buying? We didn't know there was a downtrend. And then all of a sudden, my JDSU that I bought at 120, because I said 120, that's phenomenal. It dipped to 90. Oh, load up. Buy the stock, for God's sakes. Then when it went to 10, $10 a share or 11, I remember going to TD Waterhouse and talking to my broker, and I go, you know what? I'm going to cash out of this one, because I actually drove to the office and made the trade, and it's pretty more money in my account. I'm trying to decide, should I buy JDSU? And I go, you know what? JDSU is 10 or 11 bucks. And he goes, really? It's that low? Oh my God. I go, well, I'm scared of it going to $2 like these other ones. He goes, not JDSU, not that one, no way. So I loaded up on it, Tim, and guess what it did? It went down to 2. And I was like, okay, what is going on? And that's when I started listening, and there's a thing called a downtrend. And what I realized is I was glad I kept my day job, which was my business. But what an experience. I go, you know what? That was fun. That was a roller coaster, but that was fun. And if I had a little bit more education on when to get out and not be greedy, why didn't I take my profit? There's got to be some rhyme and reason to this. And then guess what? I realized Warren Buffett didn't lose any money. He was richer. The professional traders were still richer.
You guys
learning about messed up. So,
yeah,
Tim,
you guys are listening to the Trading Justice podcast with your host, Tim. Oh, Gino, can you hear me now, bud? I think we might have an audio lag there. You've got me in on every word. I'm trying to pull a drop in and do some advertising for us because I want people to know all about what we're doing over there. It's just you and I here tonight. I'm enjoying this thoroughly. There's a couple of things that are grabbing me. Number one are the lessons of a new trader. And it doesn't matter if it's 1998, 2008, 2014. These lessons ring true. In fact, even 1928, 1938. You go back and you look at the history of markets and you read these books from professional traders, and a lot of the same mindset and psychology and learning about yourself and learning how to money manage, it applies all the way through the course of history. Let's talk to the beginners out there for a minute about your journey as you moved forward past that. At what point did you start teaching people how to trade?
Well, that's the funny thing is I was teaching strategies and I was teaching market basics and fundamentals and all that stuff. But what I wasn't teaching and what I wasn't using because I didn't know was a system. And man, if you're listening to this right now, I don't care who you are, any business, anything that is going to be successful going forward, if you don't have a system, you are gambling. McDonald's doesn't just wing it and say, a small fry, yeah, just, throw them a handful of fries. A large fry, yeah, make it a little bigger. No, they know exactly how big that fry bag is. They know how big the scooper is. They've got a system to where they can leave that business, which is the number one restaurant in the entire planet. You might not like their food, but they feed 5% of the population every day. That's how big McDonald's is. Nobody's had the growth or success like them because they have a system. And that's called turnkey marketing. And it's a big thing. It's having a system. What that means is this. In stone, what do I do if it's bearish? What is bearish? What is bullish? Then you test your system. Is it making me money? See, I was just going, yeah, I'll use this strategy. Yeah, I'll use a trailing stop. Yeah, this is a great strategy. It's brand new. I'll try that one. In fact, Tim, I learned the straddle where you buy a call and a put. I thought, man, what an awesome strategy for the dot-com era, right? Stock goes up, you make money. Stock goes down. Nothing went sideways. Perfect. So I learned the straddle. Just buy a call and a put at the money. And I thought every stock, that was my, if I was an artist, the straddle was my paintbrush, and every stock out there was my canvas. I was just going to go out there and everything was going to be straddle. And then, of course, I learned my lesson on that one. And the school of hard knocks. But then that's when I started hearing about guys that were very successful, had a system. And I'm like, what do you mean system? Strategy? No, a system. What do I do? When do I stay out? When do I sit on my hands? I got a mentor, and he taught me the basics of charting. He said my problem is I was not letting go of those stocks that were in an uptrend now turning in a downtrend. And I was scared to death of a downtrend, and it wasn't about buying on dips. It was more about playing the downtrend. And then after it turned into an uptrend, playing the uptrend. Getting rid of my bad habits. And then I realized I had a lot of bad habits. And after about a half dozen mentorships and coaches, I had to break that stubbornness, Tim, of trying to figure out everything on my own, which is hard to do. And that's why we don't have a lot of business owners, is because people are either told what to do, or if they're going to own a business, they're going to try to figure it out on their own and not leverage themselves. I was embarrassed to say, I was trading for a couple years and learning from guys that were trading for a year and already had a system. But they didn't have bad habits. That's the whole thing. So in order for me to make this a profitable hobby and get out of the game and gamble, you have to have the education, period. You have to have the education. But to make it a hobby and a successful hobby, you got to have a system. So I started developing my own systems and back testing what I did wrong. And that took quite a few hours, and recharting, looking at indicators. I got rid of the MACD and put in the stochastics. Got rid of the stochastics, put in the channels, added them together. The RSI. Studied the guy who invented the RSI. Studied Bollinger. Studied the Chaikin flow. All these things, and started going, okay, what was their guys' system? You see, the RSI, the relative strength indicator that was developed by Wilder, he didn't just develop that one indicator. He developed a whole bunch for his system. So I said, what else does he use with his? Bollinger, what does he use with his? Because he developed those for a system. And then sure enough, Tim, the market calmed down. In 2003, we had this nice rally. The VIX dropped, options were cheap, and I had a couple of systems. I had things that were making me money routinely, consistently. And I realized the gamble was gone. I went from a gamble to a game to a hobby. And then, guess what? My account started growing. And I realized one thing, back to what I said in the beginning. I like to trade. That's what kept me in it. I mean, a lot of people gave up. It kept me in it because I liked it. I enjoyed it. It was a challenge. It was ever learning. And I'll tell you now, Tim, I'm kind of glad that there's a lot to learn because it keeps you plugged in. And if you like something, you like learning it. If you like something, it's easy to be disciplined in it. And I liked it better than working in my business I used to be in. I like it better than any day job I ever had. I like it better than any sport I ever played. But, hopefully, people get that way because they'll graduate and learn faster. But the technology made it fun, the software, meeting people like you and Matt. We learn from each other. We motivate each other. And next thing I realized is to go from a hobby to making it a business is a big step. And for some people, that's not even their choice. And now remember, Tim, I was just doing this out of a curiosity. I had no plan of trading for a living. But going from a hobby, I don't know if anybody's ever done that. I know business owners have done that. It's called taking the leap of faith. It's when you quit your job and you start your business. I have a friend who was actually a very popular bodybuilder and in Peru. And he said, man, that was the hardest thing. I should have never done it. I said, why? And he goes, I used to love working out. You have to love working out if you're going to be a professional bodybuilder. You got to love it. I mean, that's just day in and day out. And you're sore all the time. It's a lifestyle. So he goes, well, the day I decided to, make it a living at it, I had to do it every day. It's not whether I wanted to or not. I had to. I couldn't just do it because I liked it. If I'm sick or tired, I have to get up and do it. Now you have to do it. It's your business. It's your livelihood. It has to be your lifestyle. You see, when you have income coming in from a job or you have income coming in from a business or you're retired, it's always a hobby. But when you said, I got to rely on it, I remember my friend Noah, Coach Noah Davidson, he said, wow, I was driving home when I got rid of my software job and I said, wow, tomorrow I'm going to start my trading career. Oh my God, I got to make trades for a living. Oh, it was fun up until this point. Now you're under the gun. Now you got to perform. You got to hit your goals. You got to pay those bills. So what was fun and a hobby became serious. So now you really have to enjoy it. And now you got to make commitment. You got to go, okay, my system has to be bulletproof. And then a famous man, one of the biggest authors in the world, I had a chance of meeting. And he taught me something right from the beginning, from day one. You know what he said to me, Tim? You know what he said because he heard about my journey? He said, you learned a lot. That's why you're a mentor. And that's why I have you as a mentor. But what you've really done is you learned, and then you had to go back and relearn. Or actually, you had to unlearn. You had to unlearn. And then you have to relearn. He said, some people learn and that's all they do. He goes, it's the wise people that know what to unlearn and how to relearn to break those habits. So you have to learn, unlearn, and relearn. And, I thought about that. I said, wow, that is what I did in my journey. You're always learning. Whether it's learning or unlearning or relearning, that's constantly what you're doing in life. And I had to do that with my trading style, and you just have to make those changes. And here I am almost 17 years later, and I am still unlearning bad habits, relearning things that are better. And how do I do that? Being plugged in with people like you, being in the markets, listening to Matt, God, he teaches me so much about Forex and the economy that's overseas and stuff. Because one person can't do it all. I mean, think about it. Where would anybody be getting this information if they weren't listening to us right now? They're learning. Whoever's listening right now, you're learning. What are you taking from it?
And with that in mind, I do have some advice for anybody who's listening right now. If you're an educator or a teacher in any regard, and by the way, if you're a human being, you are. You may not know it yet, but you're teaching somebody, whether it's your kids or your neighbors or your colleagues or your friends. If you have a chance to share knowledge, do it with passion. You know, one of the things, Gino, that has always impressed me about you, that I thoroughly enjoy about the way you mentor, the way you teach, is you always bring passion and energy to a subject. And I think that when you're a student and you can pick up on the excitement and the energy and the passion from your teachers, it makes it that much more palatable. It makes it that much easier to listen to them talk about, you know, the oil markets and the politics in Russia and the futures market and the VIX and all that stuff. What advice would you give a beginning student right now who might think to themselves, you know, I want to make this a business like Gino. I want to quit my 9-to-5er. What path are you going to put them on?
That's a great question, and I'm getting that a lot from students. What should I do? What should I focus on? What's going to make me money the fastest? What strategy should I do right now to make money the fastest? And I said, don't try to make money fast. Everybody's so impressed. Like, make money fast, great. What's better, stock market or real estate? What's better, Forex or options? I don't think there is a better when it comes to financial markets. What's better for me is what I like to do best, and that's what I enjoy doing. That's options. I love options. Then I like stock and futures and Forex. But right now, options is my thing. That's what I like to do. So for me, following what you like to do. People go, do I do Forex or I do options? Which one? Well, Forex is easy to learn. There's not a lot to learn. You don't have fundamentals and stuff and company announcements. You have more leverage. It's the most popular vehicle to trade in the entire planet. More people trade Forex than anything. But what's keeping you going? What's keeping you motivated? What makes it fun? What makes it fun to me is the option strategies. I love the option strategy. So you focus on something that's keeping you going, because you have to get the education. But the main thing is this. If you're brand new, you got to get it in your head, especially engineers and doctors and lawyers, because I've dealt with all walks of life. It's the highly educated ones, Tim, that have a hard time with this, is you're gonna take some losses. And you know what? That's what happens. It's just like a business owner has expenses. A trader has losses. I had a couple losses today. I had a few winners today. In net, at the end of the week, most of the time, I'm up. I'm making money. But you see, the beginners are so worried about losses that they want to hang on to it until it turns into a winner. And that's not the name of the game. The name of the game is this. As soon as you realize that it's a loser and the stock chart is not doing what you thought it was going to do, you should have been out already. You should have been out already. And they're so afraid, well, then it's going to go back up without me in it. It's going to go back like I thought it would. They're so afraid of missing out. You're going to miss out. You're going to take some losses. So once you realize that, you got to place a lot of trades. And really, Tim, what I do now is I don't spend nearly, oh my God, I'd say a tenth of the time analyzing a stock like I used to in the beginning. I look at a chart. I briefly look at what the company is, maybe spend 10 seconds on the fundamentals, and I'm off to which option am I buying, what strategy. Why? Because I'd rather have 20 trades out there right away and immediately start closing my losers and letting the winners ride than spending hours trying to find one trade to put out there and finding out it's still a loser. Because there's a little bit of randomness there to it, but that's what all these traders told me. And you know what's funny is there's a guy named Jack Schwartz. What was his name? The guy from Market Wizards. Who wrote that book? Market Wizards, a guy interviewed a bunch of traders, and he's got a couple additions to the book.
Is it Swagger?
Swagger, yeah, Jack Schwager.
Yeah. That was one of the first books I ever read, by the way. It actually got me really passionate about learning systems, because what I love about that book is that he interviews all of these different traders, and they had success in their own way, you know. And I thought to myself, Gino, when I read that book is, you know what, I can make this my own. I can make my own system. I can find my own niche that fits my personality and my risk tolerance. And I love that book. That was one of my favorite books. I read it when I was new at trading. And you're right, if I stacked all the books up, they probably would go about 3 stories high. But anyway, go ahead and finish your thought on that one.
Yeah, real quick though about that thought is one of the things that caught my attention in that book is Jack Schwager was looking for what these guys had in common, how they think. And very few of them were naturals. They had to learn from their mistakes. And that's why we place trades in the beginning, is to learn from the mistakes. You're not going to learn from mistakes in a book. You have to learn from trying it. You can't learn how to fall off a horse. You got to get on the horse first. You can't learn how to scuba dive properly until you get out there and actually figure out what you're doing wrong. You got to practice. And that's the thing is, you can't teach without doing it. You really can't teach. You gotta get in there. And that's why I actually learned the hard way. I try to learn from my mistakes and realized there were so many mistakes, then went to the books. What Jack Schwager found out is most, if not all, of these very, very successful wizards. Now, meaning wizards, they had to have a huge return many years in a row and had to be like the top traders of the day. Well, one of the things that blew me away is they had this in common. They all bankrupted their account at least once on their journey to becoming a trader. And I said, what? Oh, that's good news because I already did that in the .com thing. So I already said, wow, I already went through that. So they all had a .com story. They all had a market crash story. The second thing they all had in common, ready for this, is on the reward side, they were only shooting for double digits. When I say double digits, annually, we're talking 10 to 20% is all they were shooting for. Then I go, well, wait a minute. Why are they making 100, 200, 1,000? Because you see, when they say they're only shooting for 10 to 20, that's their greed talking. They're not that greedy. They're like, hey, I'll be happy with 10 or 20. And by not being greedy, they're getting that monthly. And next thing you know, they're market wizards. So in order to be a market wizard or to be like them, if you want to be, you got to go through the same experience. So you might as well start. You might as well start and say, this is what's going to happen. I'm going to take losses here and there. I don't want to be greedy. If I make 10%, great. It's better than the market does year over year anyway. And you just have to, that's the whole thing, is the thought process is you're there to make money. If the market gives it to you, great. But your job is to control that risk and enjoy the ride. Now, Tim, when I started realizing that and I started trading my business, I knew exactly how much money I needed in my account. I knew exactly how many trades I needed to do, how much I needed to make per week. Then I realized my hobby was my business. And how long can I do that? How long can I keep it a business before it goes back to a hobby and I change careers? Well, I didn't want to change careers. So once it becomes your business, one thing about trading that's different than any other business out there is it has to be part of your lifestyle. Kind of like these bodybuilders. Even when they're not in the gym, they're eating good. They're eating good and sleeping good. They're always living that lifestyle. And guess who they hang out with? People that do the same thing. Guess who I hang out with, Tim? People who trade. People who trade for a living. Investors. Big investors. People who watch the market. Because that's what keeps my attention. That's what I like to do. I don't hang out with, I used to hang out with my group of surfers and my group of beach bums. And it's fun. I still do when I have time. But that's my hobby now. That's not my business. The business comes first. Then there's one more level above business and lifestyle. That level, Tim, is what you and I are pursuing, is a pioneer. You become a pioneer. And that means you're trying to help the industry and make it easier for others. You're trying to find new things. So our website we developed, we're putting our system in there, our training, our education, to make it more viable for others to access. And I don't know what level's above that, Tim, but in this business, there's always more to learn. There's always more to create. The software's changing every day. The website's changing. Our website's changing all the time. And we're getting more involved every year. And it's just uphill, and it's just adventure the whole way. So I'm really enjoying it.
Yeah, me too. I got to tell you, I'm so excited about the whole thing. I think the venture we're in is tremendous. And what you just said right there, actually, it strung a chord with me because I believe you should pursue passions in life. And, some people want to go home and play their video games or watch the 4th season of some show on HBO and they watch it from back to back, or they're just not pursuing passions. I talked to one of my closest friends in the world the other day on Sunday, Gino, and I could tell he was just off. He was just off. And it was Sunday night. It was 8 o'clock. And I asked him, I said, dude, what's wrong? And he said, I don't want to go to work tomorrow. It's like, I am tired. I've got this project at work. It's been driving me nuts. I hate my job. And I just told him, I said, you know what? I do want to go to work tomorrow. Because I enjoy what I'm building. I enjoy what I'm doing. I enjoy teaching. I enjoy trading. I enjoy the entire thing that we're doing over here at Trading Justice and Tackle Trading. Because when you pursue passions, you're going to have a lot more success. I know it's an old cliche, but it's a true one. Surround yourself with successful people and ask them, when did you make that change? What happened where you went from being just an employee, where you're giving up your time for something you don't love, to where now you got the keys to the car? We're going to wrap this one up. You've been listening to the Trading Justice podcast here, hosted by TackleTrading.com. Gino, I've thoroughly enjoyed this conversation. We'll have to do this again soon. Why don't you take us out with your final thoughts?
Final thoughts is just pursue your passions, and we love trading, so we're here to talk about it for you guys. Check out our website, Tackle Trading. Don't give up on these podcasts. Stay motivated, and have a positive attitude about trading. Just take it for what it is. You're always learning. If you're not learning, you're not growing. And I have almost 17 years of trader now, Tim, and I'm still learning. If I'm not learning, I'm teaching at least. But yeah, that's what it's all about, and I'm glad to have associates like you and Matt on my side here, and I hope we keep these podcasts going every week.
Absolutely. We're going to do a expiration party at Tackle Trading on Thursday night, just in a couple of days here. I don't know when this podcast is going to hit the airways, so just the day before expiration, I'll be hosting that one, Gino. Check your schedule if you can make it. I'm sure the people would love it. We'll talk more about that down the road. But everybody out there, enjoy the week. Have a successful week. Start planning for how you're going to deal with this volatility. And just really enjoyed it, Gino. We'll talk to you soon. Peace out, man.
Well, there you have it, folks. You've been listening to the Trading Justice podcast presented by Tackle Trading. Like Tim said, we're going to have a coach show here just in a couple of days. We call that coach show expiration party. We do it the Thursday night before expiration options every single month. If you like the podcast, leave us a nice little review there on iTunes. And for all of you who listen to the podcast, thank you so much for keeping the sales blowing here and for helping us build this thing. It's much appreciated, and we couldn't do it without you listeners out there. So once again, much appreciate that, and we'll see you next time.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.